Everyone, welcome back. So I was reading a quote which goes like, if you don't have the financial discipline to turn $1,000 into $10,000, you're not going to magically develop the discipline to turn $10,000 to $100,000 or $100,000 to $1,000,000. Financial discipline comes first. The wealth comes after. I think that's true for anything in life. If you want to be healthy, you got to be disciplined first, and then the health comes. It's not the other way around. So I want to be quite disciplined in my approach to get to that $1,000,000. Now, I also understand that I don't know much. I do not know a lot about the world of investing. I'm experimenting as I go. And as I go, I'm actually putting for myself set of rules that I want to live by, that I want to abide by. And you know what? Some of these rules, I have definitely read some books. I have, watched other YouTube videos and so on and so forth. So I always constantly, try and see if I'm actually, sticking to my discipline or not. For that, I created a spreadsheet that tracks my activity from the beginning of this year. So beginning of this year is a time that stock portfolio sort of started to tumble down, and I have at least kept up my investments even during this time. But I've made some mistakes as I've gone along as far as this year is concerned, and I just wanted to like document that out here to not make that mistake, and if anybody is watching, to sort of urge them to not make that mistake either. But again, the opinions that I have out here are purely mine, just based on what I have seen in the last 2.5 years. And to be honest with you, this is the first time I am going through a time in the market where I'm not sure if the stock market is going to grow or go up in the short run. But I still think that this is the best vehicle for generating wealth. So again, just documenting what I'm learning on my way to $1,000,000 portfolio. Before I go to my spreadsheet, just a quick update in terms of where my portfolio is. So as you can see, still hanging on to my dear life. There are quite a few downs and then ups and then downs and a lot of ups and then a bit of downs. Currently at $229,882, and I have basically been investing regularly. I have not added any new stocks to where I was. So if you look at my previous videos about my investments, I have not added any more stocks, meaning any net new positions. I've been adding to the positions that I currently have, and I think that's how I'm going to go. As a matter of fact, I have 40 odd shares that I'd bought. I diversified a bit too much. Maybe it's time to sort of cut it down and maybe like stick to a few stocks. Either ways, this is where I am. Really sad to see. If you look at a 3-month performance, I'm down $33,456. So far, I'm quite happy given where the market is. I thought this would be down much more. I thought I'd hit less than $200,000, which has not happened. So you know what? I'm a long-term investor. I'm going to learn from my mistakes. I'm going to make mistakes as I go along. I'm a long-term investor. I'm just going to keep on with that financial discipline. And anytime I go off that discipline, I'll come back on it. And just keep analyzing what I'm doing in the markets. I think there are certain things I'm doing right, and there are certain things I'm doing wrong. So in terms of my activity over the last few days, as a matter of fact, starting from January 1st or December 31st to Feb 8th, which is today. So my portfolio is down 9% from then on. Obviously, it's down much more, as I showed you, from November 2021. One thing I believe that I've done right, and I've put my learnings out here on the side. Invest regularly despite the fluctuation. So that's what I would be able to do. If you look at it, even during these times, I have put into the market $7,532 of my hard-earned money, the money that I've saved or have made a conscious effort to save to invest in the market. I have a full-time job. That obviously is very, very important to me, because without that, I won't have any capital to invest into the markets. But this is my passion. Investing is my passion. So I have actually was quite surprised myself that I have actually invested $7,532 over the last 1 month and a few days, maybe 8 days. So again, I have another thing that I think I've done right is, continued with my strategy of investing in fractional shares. Whatever money you can find, $10 here, $20 there, just take it and put it into the market. I've been getting dividends as well, so I put those into the market as well. So you can see, for example, Apple, I've invested $66 into, got 0.41 shares. My transaction price was 160. Currently, the stock price is at 175. So I definitely have gained $6. And so on and so forth. AbbVie, same thing. I have invested $147, bought 1.08 stocks. And my AbbVie position from the time I added it this year is up $8.31. So what mistakes did I make? The mistake that I made was I went in head first into Facebook. Now, I'm not talking about investing in Facebook. Look, what happened with Facebook was out of my control. I could not have predicted that the stock is going to be down so much. That was not what I was referring to. What I was referring to was I've always maintained to go slow and steady into a position. What happened here was greed sort of took over. I thought Facebook stock has already taken quite a bit of a beating. And if I look at the Morningstar research report, Facebook stock is about $400, valued at $400. So I have a lot of upside that I could sort of gain from being in the Facebook stock. And I deviated from my discipline of going slow and steady into any position and investing small sums of money into the shares, and letting them sort of do the work for you over a long period of time. Here, I believe I got greedy and I really got hammered. So I made a video on Facebook. Once the stock was down, I immediately went in, tried to understand what was going on, and the stock has continued to fall from that point even. So that was a big mistake. Another mistake that I made was I pulled money out of Tesla. So here I had greed, all over me, and here I had fear ruling my mind. So I had, one fine morning, I just looked at Tesla going down, and because it is one of the biggest position in my stock portfolio, I just pulled the trigger and I sold Tesla. Now I went back into Tesla, so I sold 22.5 shares of Tesla, and I realized my mistake. I went back into Tesla, bought those shares at about $911. So, net selling Tesla cost me $702.32. Now, look, from where I come, $702 is a big money. It's not small amount that I can experiment away. But I'll let that be a learning for me, that really hurt me, for at least 2 days, because I was like, what have I done? But I'll just keep it as a lesson. Let fear and greed not govern you, because I think markets are going to eat you for lunch if that is the case. But anyways, those were the two big bets that I made. One was selling Tesla out of fear. One was buying a lot of Facebook out of greed. I also spent a lot of money into Asana, but I felt like the stock, I like this company. It's a work flow company. It's there's a lot of insiders buying the stock. As the stock fell from a all-time high or a 52-week high of $145.79 to now at $55.50. It fell quite a bit, and I felt BlackRock has an investment in this company, and I think what it is going to be something big in the future. I'm just betting on it. I could be wrong. I've said that I put some money for speculation. I did not go head first into this position. I have slowly, steadily built up this position, as opposed to Facebook, where just before the earnings, I listened to a few YouTube videos and I was convinced, all right, Facebook is going to, go up, and I put a lot of money, my hard-earned money, into it, and I really lost out. I could have actually taken that money invest into the VOO, which is, my fourth point here. VOO is still the best bet given the current market situation. That's that going forward for me. I'm going to anchor everything on VOO. If I have $10 to invest, $5 are going to go to VOO. That's what I promised myself. I'm going to keep adding to my VOO position. And why not? If it steadily sort of climbs and goes up and is a little bit immune to the current market fluctuation as far as tech is concerned, because of its diversification, why not put money into the VOO shares? So $6,561. I have taken Tesla money, put it in out here, and I've also taken some of my money and put into VOO. What I've done is, if you see this column out here, whatever actions I've taken, over the last 40 odd days have cost me $1,012. I am down $1,012, meaning that my money has kind of evaporated because I lost money in the Tesla bet, lost money in the Facebook bet, and then some small, losses which have been covered by gains actually. But then I've also realized that, there are some dividends that I've gained because of these investments as well. So, for example, Apple, $66.18, that gives me a 36-cent share, dividends for the upcoming year. AbbVie, for example, I put in, $147. That because of the crazy dividend yield out there, I'm going to get $6.10 in dividends. If I go to VOO, because I've added so much, I'm going to add $88.79 to my annual cash flow through dividends. Therefore, whatever I've done over the last 40 days has helped me grow my dividends by $108.63. And I just wanted to put a net sort of loss or a gain position as far as my investing activity was concerned. So if I take my losses plus what I expect to deliver in terms of dividends for the full year, I get to $904. That's my loss, net loss. I've also put out here, a chart which kind of like, or not a chart, but a table which kind of talks about, which kind of demonstrates, how far these stocks have fallen off their, 52-week high, and just to give me some sense of, am I even doing it right or not? Am I even sort of, am I actually investing in the company that have fallen crazy? So are there any bargains or not? I look at Adobe, I look at, Asana. Obviously, these have fallen quite a bit. CRM, which is the Salesforce company, has fallen 43%. Facebook has fallen 75%. Lululemon has fallen 45%. Nvidia has fallen 36%. Shopify, another stock to look at. I'm going to do an analysis, maybe put it out on video for this company. I think it's a great company. So on and so forth. So I've lost, from the Tesla is down 35% from its 52-week high. So anyways, I just wanted to give an update, and sort of document the mistakes that I've made and the things that I've learned. Again, just to summarize, keep investing regularly despite fluctuations. That's what I think is the best strategy for me. Don't be ruled by greed or by fear, because when I was greedy for Facebook, I, went away from my discipline of investing a little bit of money at any given point in time, or diversifying it, not putting a lot of money into one stock. I did that and absolutely got hammered. Tesla, I was fearful. I took the money out. I should have thought a little bit. I should have maybe taken a walk before I took the decision. Not the time for big bets. Again, keep investing those small little dollars, $5, $2, $3, $1, fractional shares. I think one of the best things that has happened to this generation of investors is that now you have access to fractional shares. You don't need stock splits to be invested into a company. You can go in and buy shares with as little as $1. So keep taking advantage of it. Look at it. Home Depot, I bought 0.03 shares. Morgan Stanley, I bought 0.2 shares. Microsoft, 0.16 shares. Nvidia, 0.93 shares. Realty Income, 0.35 shares. And that's, it makes it much more affordable. It makes it much more, easy to sort of, bear a loss if in case that happened. So keep investing. And again, I think even in these times, was true earlier, but it's actually more true now that VOO, or the ETF S&P 500, is so important right now because it anchors everything. It gives you the diversification. You don't have to think about a particular company. So I'm going to keep investing my money into it. I have made it a point that every single dollar that I'm going to put into the market, 50% of that is going to go into the VOO, because I think those are stable returns, has a bit of a dividend yield as well. But either ways, this is where I am right now. Again, I deviated from my discipline. I've learned I learned from my mistake. I've learned my lesson. I'm going to continue from there. Anyways, guys, if you listen to this, thank you so much for listening. I'm not an expert. I do not give financial advice. All I'm trying to do is I definitely want to connect with like-minded people who value savings and then value investing, because that's the way to go. And be disciplined about it. Doesn't matter, market is up, market is down, you identify a few shares and you keep investing in them. It does not matter how things are going, and not be ruled by greed or not be ruled by fear. Anyways, guys, I will connect with you again, hopefully with some company analysis, just like Facebook. And maybe Shopify is the one that I want to look at next, because I think that might be in the bargain territory, personally speaking, because the current PE is, I think, 30, if I'm not mistaken. I could be mistaken. But anyways, I'll connect with you later. Thank you so much for listening, and happy rest of February.